Nvidia became the world's most valuable company the same day Fisker filed for Chapter 11. And other than that, well, the economic data was mixed from the US. The Federal Reserve speech was quite discouraging, but the British inflation hit the 2% policy goal just this morning. So welcome. This is Swissquote's Daily Market Talk. There you go, guys. Nvidia finally stole the title of the world's most valuable company from Microsoft and Apple at yesterday's trading session, following a beautiful 3.5% rally that propelled the share price past the $135 a share. The catalyst was just a bullish call from a random analyst at Rosenblatt Securities, who revised his price target up to $200 a share from $140 and said that its market cap will reach $5 trillion in the coming year. It's basically the Wall Street version of Roaring Kitty. Now, of course, the top three is quite volatile these days in terms of market cap in the US. It comes and goes between the hands of Microsoft, Nvidia, and Apple. But the three have one common denominator, and it is their AI exposure. Microsoft, which brought ChatGPT to public eye, has doubled its share price since the beginning of last year. Nvidia, which designs these chips to power these AI models, well, saw its share price multiply by almost 3 since the beginning of last year. And Apple, which now aims to bring these AI models to their iPhones in a private and in a personal way, has just started seeing the investor interest since about a week now. Now, with each fresh record from a big technology company in the US, and there are plenty of them on a weekly basis, mind you, while the concentration of the big technology stocks in major US indices obviously rises. And according to Bloomberg, the Magnificent Seven have contributed to more than 60% of the S&P 500's total return so far this year. And the rest, well, the rest is not doing necessarily as well. The S&P 500's equal weight index, for example, is rather stagnating. The reflation trade is waning along with hawkish Fed talk, and we have mixed economic data from the US and still a chance that we see a sharp economic slowdown in the US economy as a result of a painful tightening cycle. And also we have the fact that the Fed members are just too cautious regarding the inflation's trajectory toward the 2% policy target. And the winds could finally be turning for the US economy, where the jobs market and consumer spending remain just too robust to allow the Federal Reserve to achieve what it tries to achieve, meaning that 2% inflation target with a softer demand. Data yesterday showed that retail sales in the US barely increased in May, and last 2-month figures were revised to the downside. And well, core retail sales in the US even fell 0.1% from a month earlier. Industrial production, on the other hand, jumped more than expected by analysts. But overall, the data was supportive of the Federal Reserve dose and sent the US 2-year yield down below the 4.70% mark yesterday, quite shortly, but still, the 10-year yield fell to 4.20% mark, and a strong sale of US 20-year paper also boosted appetite before US markets went on a short one-day break today. Now, those are the good news of yesterday. There were also bad news, and the bad news was that Fisker, which was once a hyped EV maker and which took part of the 2021 EV mania, filed for bankruptcy. And the day Nvidia saw its name top the S&P 500, while Fisker's failure sounded like, be careful, you investors, we have seen beautiful rallies like that ended up in tears in the past. Yes, Nvidia and Fisker are not comparable, but the EV makers were supposed to be the next big thing in transport a couple of years ago, remember? But unfortunately, the timeline to mass adoption of these EV vehicles has been longer than expected, and people didn't necessarily rush to buy EVs, and the most popular EV companies are now falling one after the other. In the sense, Lordstown, for example, already went under last summer, and the Saudi-backed Lucid Motors might burn another 10 billion US dollars, it is said, before its next generation EV sees the daylight by late 2026. Now, it's not said that the AI related stocks, the chip stocks, will share the same sad destiny than the EV stocks, but there is always a chance, there's always a risk that something goes wrong. And that something could be, the realization, for example, that the companies must spend much more money to make something valuable out of their AI investments, as it was suggested by the latest quarterly report from Meta, remember. It could be that the training costs of AI models go too high. It could be rising competition, or it could be the fact that companies realize that AI may not fully replace a human being. It could be anything. But for now, we know that investors are fully in, hope that AI will change the world is the leading idea in the investment community, and it is paying off. And before I move forward, I actually want to show you a chart from Visual Capitalist from last week that's already outdated, but you have a nice visualization of the US dominance on the global technology scene here. The US big technology companies' market capitalizations actually dwarf the rest of the world. China saw the market cap of its once beloved giants melt to almost nothing. Taiwan's TSM benefits from some tailwinds from the US and European peers, and South Korea tried to survive in the corner, but Europe is almost not present, and there is not a single Japanese name on this chart. Overall, 14 of the top 20 technology companies of the world are American. Elsewhere, the European and the British stocks rebounded at yesterday's trading session on the back of this encouraging economic data from the US and a jump in oil prices, especially for the FTSE 100 index. Crude oil jumped past its 50, 100 and 200-day moving averages since Monday this week, and is consolidating gains above the $81 per barrel level this morning on the back of geopolitical tensions in the Middle East, increased fuel demand for summer, and also this tight supply policy from OPEC. But interestingly, the 2.3 million barrel rise in US oil inventories last week, according to the latest API report that was released yesterday, didn't really discourage oil bulls from carrying this rally above the $80 per barrel psychological level. So is something changing? We are going to see that in a couple of days. But on the data front, while inflation in the Eurozone ticked slightly higher in the month of May, that was mostly expected by analysts, while sentiment in Germany remained quite weaker than expected. The euro-dollar recovered a part of last week's losses, but the main catalyzer of the gains in the euro was a broadly softer US dollar. So the French political risk continued to remain a sizable downside risk for the euro bulls, and could discourage them from fully benefiting from a potentially weaker US dollar across the board. And across the channel, inflation in the UK hit the Bank of England's 2% inflation goal just this morning, and that fuels speculation that the Bank of England could eventually announce a surprise rate cut when it meets tomorrow. Now, Sterling's knee-jerk reaction to the inflation data was surprisingly positive, and I think that is because there is very little chance that tomorrow will bring a rate cut in the UK from the Bank of England, as inflation in the UK is expected to head back to 2.5% in the second half of this year, but the thought of it could actually keep the sterling bulls under control until tomorrow's MPC decision. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.